The fourth halving in Bitcoin history is just a few days away, and people are full of expectations for a potential skyrocket in price. But what about mining? Miners will still have costs, but the rewards will be halved. Will they even want to continue? So far, the network's hash rate has dropped significantly after each halving. In 2012 by 25%, in 2016 by 11%, and in 2020 by 25%. This year, however, a significantly different number is expected. According to the hash rate index, this year's decline could be in a range of 3 to 7%. The prediction is based on the current high price and high profitability of mining. In addition, approximately 70% of devices on the network are running since January 22. At that time, the price of Bitcoin was significantly lower and conditions were tougher. The decline would be short-lived anyway. In previous cycles, it returned to its original values in an average of 57 days. Some miners will make a loss. This will cause their high cost and inefficiency of the equipment. Most of the industry today is still working with inefficient machines like an anti-miner S19J Pro. This device needs an operating cost of 0.05 kW per hour to maintain a profit margin even after the halving. However, according to statistics, most miners in the United States operate at a cost of $0.08. This will likely lead to a massive modernization of mining facilities in the US. For example, the new anti-miner S21 can mine 1 Bitcoin after halving at the cost of around 22,000 USD even in the United States. Bitcoin mining is not the only possible source of income for miners. The low price of Bitcoin last year forced some companies to look for new sources of income. Of course, with the price rising again, this does not seem so necessary. But after the halving, ideas could come in handy again. For example, Hash Labs in Finland already practice this model well. They expanded their income by selling waste heat to the district heating system, profit from stabilizing the electricity grid and also selling electricity back to the market in a period of high spot prices. All this contributed to stabilizing and diversifying the risk of a loss of income. Not all miners will go in the direction of increasing mining efficiency or income diversification. Surely someone will decide to go in the direction of cost reduction. In that case, electricity prices, either by building your own power plant or by looking for a low-cost location. Today, 40% of mining takes place in the US, 15% in China and 12% in Russia. But the industry is also gradually looking for destinations like Africa, Latin America or Asia, where electricity is still very cheap. For example, Bitfarms is targeting Argentina and Paraguay, Bitdeer is expanding mining in Bhutan, and Marathon is entering the United Arab Emirates and Paraguay. Ultimately, the actual impact of halving on the price remains the question itself. While historically the event is always labeled as bullish, this year many analysts are not so sure. Rather than scarcity shock, they expect marketing induced by FOMO. The main reason is the size of reduction. At the halving in 2012, the reward dropped from 50 to 25 Bitcoin, in 2016 to 12.5 Bitcoin, and in 2020 to 6.25 Bitcoin. It will currently be reduced to 3.125 Bitcoin. Daily mining is currently around 900 Bitcoin and after the halving will reach around 450 coins. Considering the current amount of Bitcoin on the exchanges and the daily spot ETF purchases, this is unlikely to create more a shock than it is now. Still, the media can create a shopping frenzy with a sense of scarcity, and FOMO can work wonders. However, we will soon find out how it turned out in the end.